Hey, welcome back to the next video for smart real estate investment analysis. So let's zoom out to give you a perspective of where things are at. So if I zoom out totally, so what we're trying to do is we put in some we've input some values as to the investment property that we are planning to buy. We're trying to look at the income that it is going to generate and the vacancy rate and everything. We've added those details. And when we look at this, we look at, okay, this is what it looks like. And I'll go through each one of these in a separate video. But let me just explain these things to you. So we still have certain input cells that we want to add. So let's just go ahead and do that. So now we are looking at our expenses. So let's just zoom right in and look at some of our expenses. Now, accounting. What is your accounting expense going to be to manage this property for a year? So I know that my accountant charges me, $1,100 a year to file for taxes or whatever I need to do. Now, if this is a property, a commercial property, it could be a little bit more, could be a little bit less, but you just need to put in whatever expenses that you pay to your accountant annually. So also there is a section here which I forgot to mention, which is about an escalation rate. So every year, if you're paying $1,100 today, it is not necessary that for 15 years you'll just keep paying $1,100. So if you need to escalate all these expenses on an annual basis, that is the escalation rate that you put in. So let's say I just put in 10% or maybe, I don't know, 7.5% and see where everything is going to sit at. So every year, if you are going to release the property, there could be some advertising expenses. So let's just call it $250 a year because I might sign a lease for 2 years or might sign a lease for if it's a commercial property, it could be for 3 years, 5 years, and so on. But if it's a residential property, it could be an annual expense of $250. I have to do it. I have to pay this for relisting the property to re-rent it every time a tenant changes. Any kind of council rates or property taxes, I know it's going to be about $1,650 a year or whatever that expense is. As a landlord insurance, you must have to have insurance in order to rent the property out. So if you've got insurance expense there, so let's call it $850. Legals and closing costs. Now there's an X over here, which basically means this is when you're buying the property. These legals and closing costs are just once only, and that's when you're buying the property. So if there are other closing costs that happen, you can put $450. Now, management fees is usually a percentage of the rental income that's coming in. So if you have a property manager that you have hired and they charge you a fee to manage the property and answer to the tenant every time there is an issue with the property or maintenance or whatever, it's your property manager who's looking after it for you, and you pay them 6% of the total of the annual rent. So you can put that amount in over here. Any kind of miscellaneous expenses that you expect to make every year, let's say $400. Owner's corporation or body corporate or a corporation that looks after, let's say it's a building and you maybe own maybe one apartment in there, but there is a general maintenance that you have to pay. So there's a body corporate on an owner's corporation, and you might call it something else in the country that you're in, that manages all the maintenance of the common areas of the building. So it could be common garden areas, common lights, parking lights, a parking lot, all those things, reception area, the maintenance of the lift, could be n number of things. So if there is an owner's corporation or body corporate that looks after the entire building, the maintenance of the entire building, and every owner of an apartment in that building has to pay something to them. So let's just say it's going to be about $2,000 a year that I will have to pay, or it will be $1,850 a year that I'll have to pay to that body corporate. Other expenses, I don't know, could be $50 a year. Repairs and maintenance, I don't know, I might have to install smoke alarms every year, or replace the batteries for smoke alarms every year, or whatever that cost is for repairs and maintenance, you need to put that in. And if you are paying for the sewer charges, and other utilities that are connected to the site. There are some certain expenses that you as a landlord will need to pick up. So those expenses need to go here. So let's say it's it's a let's call it $750 or whatever. So now that I have got these things, it's good. The only other input things that I need to put that in, that I'll include in this video, are capital improvements. So that is if you spend money on improving your investment property, and they are capital improvements. So it could be installation of solar panels or something like that, that you plan on doing. You can come in and manually add them for that year when you do that expense, because those are required in order to calculate your taxable income or cash flow towards the end of it. So if you don't have that, you can leave that blank, and you can click on update all, and it'll update all the calculations for you. Now this is pretty quick. It's pretty fast in terms of the calculation, so you can press that any number of times you want, or if you're one of those people who would just rather go in and input all the input cells, then you don't really need to press this. You can only press this once if you wanted to. So now we are done, and in the next video we'll start looking at all these interest calculations and the stuff that we can do here in the finance section.